Hello and welcome to Ask the Expert Anything, a special segment of the RinggitPlus show. In this episode, we're going to be delving a little bit deeper into term life insurance. Now, most of us will immediately know and understand the concept of life insurance, but not many people know that there are many different types of life insurance policies available. In Malaysia, most of us opt for investment-linked policies, but in recent years, there is a growing interest in term life insurance and a popular concept called buy term and invest the rest. But what exactly does it mean, and is it as accurate as people claim it to be? I'm not the best person to answer these questions, of course. We have two guests. Today, we have Priscilla Yong, a licensed financial planner and an insurance expert from RinggitPlus, and Malik Ali, a CFP himself and, more famously, the founder of FiLife, an insurtech company known for its term life insurance products. Hey everyone, how are you guys doing?
Great.
Hi, Pang.
Okay. Let's go straight into it. Priscilla, what exactly is this concept all about?
So, buy term and invest the rest means to separate out your life insurance needs from your investments needs. Which means to say you buy each of them separately instead of buying both of it under one plan. So, you buy term and invest the rest, you will have a lower entry price for the term insurance plan that you're buying. And then you use the difference to invest it yourself at a much lower cost. Maybe you buy through robo-advisor or even through FSM1, okay? You don't have to incur high cost to get a insurance policy.
Right. That actually sounds like a pretty simple concept, right? Anyway, Malik, I have been told, and I know for myself as well, that you are a huge advocate of this concept. Why is that so?
Yeah, because I think the thing is, it gets you the best of both worlds. You look for the insurance, you can cover all the insurance that you need. You look at your insurance needs and you buy a product just for that insurance needs. And then you look for your savings and investment needs and go for the best investment product out there that gets you your investment needs. So it's the best of both worlds. You're not trying to use one product to do two sometimes quite different things, right? So you don't want, with investment linked policies, sometimes you don't get enough cover because you're trying to save, and you don't save enough because you're trying to get enough cover. So with buy term and invest the rest, you get exactly the insurance you need, the life insurance that you need, and then take the balance and invest it with any unit trust, FSM1, robo-advisor, anyone, and get the best returns that you can.
Right. Okay. Again, like the way that you put it sounds super simple. But you know, what are exactly the pros and cons of taking advantage of this concept? Priscilla, maybe you want to share first.
So one of the pros of it is that, okay, it's going to be a much affordable premium rates. So for a 30-year-old male, usually if you were to buy an investment-linked policy with 100,000 sum assured coverage, okay, it's going to easily cost 150 or even 200 ringgit per month. But if you were to buy a term insurance itself, okay, buy term life insurance for a 30-year-old male from FiLife, is going to cost around 17 ringgit 70 cent, or if you want to say you want to get a level term one, it's going to be only 26 ringgit. So from you paying 200 ringgit for an investment link plan, okay, might as well you buy a 26 ringgit plan, which is a level term, and use the difference of that to buy a robo-advisor, okay?
Nice. Okay.
And then, of course, there are disadvantages as well, okay? Is that there's no cash value. Some people have the mindset of saying that, oh, I've been paying a few hundred ringgit a month, or maybe 20 ringgit per month. I want to get something back. So for those that think like that, means to say they don't actually understand the purpose of insurance, okay? Because the concept of insurance is that you get if anything happened to you during unexpected ones, okay, then you can get covered.
So anyway, I like this. It's a very balanced perspective from Priscilla, right? There are pros and cons, just like any other concept. But you know, it is becoming a lot more popular these days, especially with the younger generation. So maybe I would like to get both of your input in this one, right? Maybe Priscilla, you start first. Do you guys think that this buy term and invest the rest concept is suited for everyone?
Well, I wouldn't say everyone would prefer this option, even though it is a financially better choice to go for.
Right.
Okay, let's face it, everyone has their own preference. You want different thing, I want different thing. Some might want to leave the investments to the insurance company as they are not well versed with it, or they want protection even until they are 80 or 100 years old for whatever reason that they have. However, financially speaking, okay, buy term and invest the rest will definitely be more financially wiser choice, as you get to buy insurance for insurance protection only and invest at other platforms with a much lower cost. Yeah.
Right. What about you, Malik?
I would actually go further. I would actually say, and if you ask any independent financial planner, if both parties come from a clean, if their client comes from a clean slate, they'll say buy term and invest the rest, because it just makes a huge financial sense. I give you an example. Supposing you were to put, I took a proper sales illustration plan for a very popular insurance company. And you see your returns over 30 years when you buy term and invest the rest. The returns is actually 23% higher than if you actually sort of went for the investment linked route. There's a reason for this. The reason is that, can you imagine, would you pay your unit trust agent, would you pay them 40% to invest your money every year?
Wow.
Well, you do that so you do that for investment linked plan. That's what you do. You pay the insurance company 40% of all the funds that you're allocating for yourself into paying agents' fees, right? So basically, you pay 40% in the first year, you pay 40% in your second year, you pay 40% in your third year. Oh my gosh, and it goes on for 10 years. Your year 4, 5, 6, you pay 20%. In year 7, 8, 9, 10, you pay 5%, right? But imagine unit trust agent going to you and saying, hey, I'm going to charge you 40% for the first year, all the way to 5% into the 10th year. There's no way you would go for that investment, right? So why would you allow an insurance company to sell that sort of product to you, right? Just because you're afraid of investing? Really? You're really afraid of investing? Then just go to a robo-advisor. Just say, hey, please, just take my money, just park it in this portfolio and do that. And you will not lose your robo-advisor, unless they're really lousy, will not lose you your 40% in 1 year. And they will not lose you 200% over the 10 years. I don't think so, right? So it makes, to me, if you're coming for a clean slate, and if you're, you have dependents, go for buy term, invest the rest. Your returns will be, as we say, I've said that this one illustration is 23% higher, and there's flexibility. If your current investments are not performing, your current robo-advisor is not performing, your current unit trust is not performing, you can swap. And what's the cost for swapping? Maybe 1% charge, that kind of thing. You don't incur anything else, right? Even now, it's getting less and less. So the flexibility is there. You can now you have a metaverse portfolio. You can go for the metaverse portfolio. In the future, you have a health portfolio. I mean, today you have a health portfolio. You can go for a health portfolio. You are not stuck with one insurance company for the next 20 years.
So thank you so much for sharing your thoughts. As both Priscilla and Malik have shared, this concept, buy term and invest the rest, is a definitely financially smarter option. But I think Malik as well, I think you've also pointed out that it requires some form of discipline, and it's also, I would say, slightly less convenient when it comes to just putting all your money into investment-linked policies. But ultimately, the choice is yours. And if you're looking to purchase a new insurance plan or upgrade your existing one, but not sure how to proceed, do speak to a licensed financial planner who can not only answer any questions you may have, but also draw an extensive financial plan, including insurance coverage that's suited for you. Alternatively, there are also insurers like FiLife who offer term life insurance at very affordable rates. All of FiLife products are also sold online, so you don't require any physical interaction with agents or even medical checkups. So do check out FiLife's website to find out more about its insurance products. So that's all the time we have today for this episode. Thank you again, Malik, as well as Priscilla. I hope to talk to you guys more about insurance products and maybe even investments. You guys sound like super awesome in that part as well.
Sure.
Okay.
Thank you,
See you guys.
Thank
Thank you
you.
everyone for watching as well. Bye.